Hey traders, Ragi here, and in tonight's free video we're going to talk again about some trade management. And this is a follow-up from yesterday's conversation where I walked you guys through the yen buys that we set up, and I'm going to talk about another one of my favorite individual currency stories, and that's not only the US dollar weakness, but in this case that US dollar weakness that we've been playing quite consistently as we watch the dollar index trade lower. The other market that I've enjoyed selling US dollars against is the Australian dollar. It's all about contrast. It's all about understanding that if we have a weakness story on one side of the pair and we can pit that against a stronger individual currency story, then we have the ability to see some decent follow through. Now, the US dollar has remained weak, but the Australian dollar has actually weakened a little bit over the last week or so. Now, I want to show you guys how important even a slight contrast is in terms of having an edge versus having no contrast at all. Let me just give you an example of no contrast. Okay, weakness versus weakness. This would be the British pound versus the US dollar. If I wanted to buy US dollars, probably the best place to do it, if at all, would be against the British pound. Not right now, but generally speaking, because there's a better chance that my weak US dollar has even a chance of strengthening against the British pound. You know, looking for the US dollar to strengthen against something like the yen, which is something we talked about in yesterday's free video, looking for the US dollar again to strengthen against the yen, much more unlikely. So you think about how you're taking an individual currency story like the US and where you're choosing to buy or sell it. So let's fast forward to the trade we have in the Aussie versus US. And the Aussie US is a trade that we took back on the 7th. And this was set up on the 6th. So, I like to have at least a 24-hour shelf life. Well, I shouldn't say at least. Ideally, a 24-hour shelf life and at least 8 to 12 hours, mainly so that once we talk about the setup in the chat, once I post a chart in the members forum, and then we have the actual details of the trade in the trading log, in the spreadsheet, that everyone has some time to look at it, set up the trades, park their orders, and then wait for the trade to come to them, the entry. So this one had about a day, and it was filled on the 7th, and it was a 75.05 swing buy. Now, we're obviously seeing some follow through. So again, one of the biggest mistakes I see traders make is they mismanage winning trades. So this is a really nice winner at this point for us. I gave the chatters, I gave the members, the SFX members, an optional level to think about, and that was this dotted line at 75.65. That optional level was really powerful because it allowed us to go into the weekend on a winner, meaning we take essentially 60 pips off the table, and then we move the break even. Well, we move to a break even stop just below the entry, in this case 74.95, like I've outlined on the spreadsheet in the members area. This means that when we start to trade come Monday, we've already realized a profit, and technically all we're really doing is risking profit. Our capital is really no longer at risk. 75.95 was the non-negotiable. Now, some traders with a higher risk tolerance said, I'll hold out for those 30 extra pips, and I want to see a 90 pip profit per lot. Now, one of the most important things is to remember we don't bail on the trade at the first profit target. If you're trading multiple lots, which is what I teach everyone to do, whether it be minis or micros, if you trade multiple lots, you take 1/3, maybe 1/2 of your position off the table here, move to a break even just below the entry, and look to see if we can get to the second profit target, which is up at 76.70. We hit that today. So now we're talking about a 165 pip winner. You can take another half and be flat if you wanted to. But again, I don't recommend anyone get flat. What I'd rather you do is say maybe take 1/3 or 1/2 off the table here, and then maybe another 1/3 or 1/4 off the table here. So you still have another third or even as little as 1/4 of the trade open. And then we go to a trailing stop. Now, the trailing stop is going to be determined by a number of things: expected price movement ranges or a daily price movement range, which is going to allow traders to transition to a trailing stop. So instead of having these proactive, what I call finish line targets that once we cross through, like a marathon runner, and they cross through it, that's where we would realize a profit. At this point, it's almost like a safety net. This trailing stop is going to, wait basically just below price action with enough of a cushion where we have a little bit of room to move. And typically what I like to use is what I call the daily PMR, which for the Aussie US is 110 pips. I really don't want to get much closer than about 110 pips, or if I'm going to be a little bit more aggressive, I can go with the expected price movement range. So trade management, so important here. This is a classic swing buy, pull back into the wave, and just right now it just turns into a trend follow. So again, what I want you guys to think about is, how are you transitioning from your initial risk-based stop loss, which I call a POV, to a break even, and then to a trailing? And how do you make sure you're giving the market enough room to move so that if we break 7,700 and maybe make a run at 7,800, who knows? But if we continue to do that, how do you let the market keep moving without smothering it, but you're not risking so much unrealized profit that you're really not being tactical about it anymore? And this is one way to do it. Think about the daily price movement range, and then after the second profit target, you can start to transition from the break even to a trailing, which is where we're at with the Aussie US. We do have a lot of Chinese data out this week, so keep an eye on that. Today's risk appetite certainly does help the Aussie, and I'm going to continue to look for opportunities to buy Australian dollar. And my watch list for the Australian dollar is this. I want to look for opportunities to buy Aussie versus US, and actually also short the pound Aussie. Again, these are both Australian dollar buys against two of the weakest individual currency stories that we have. These two are just a gift that keeps on giving. I'll see you in the next update.